Hey, welcome back everyone. So we're going to be kind of reevaluating Voyager Digital today, and I'll also be making a little bit of a price prediction by the year 2023. And look, the reason I want to make sort of a reevaluation is because the more I look, the financials are just looking more and more interesting to me. Now, let me put a little bit of a disclaimer in here. I do not claim to be some crypto expert. In fact, I am not at all. In fact, anyone who tries to claim they are, I kind of call BS. I don't think there's anyone who truly fully understands the crypto market still and can claim they're an expert on how to value a crypto, coin or whatnot. See, the way I would argue that is there's a way to value a stock, and it's based on the numbers and the expected amount of money they generate, or future free cash flow, or EPS and PE ratio. And you've got all these things to, help you value a stock. But you can't do that with crypto coins. I mean, unless I'm mistaken, name to me any crypto or crypto coins that generate cash flow, that is an actual running business that generates cash flow. Something that would help you calculate a stock price. I bet you cannot name a crypto, and if you do, please, I'll research it. Let me know down below. But tell me a crypto coin or crypto or, whatever crypto that actually generates money by itself, generates cash flow, makes an EPS because it's making money, earnings per share, or I guess it would be earnings per coin, so that you can truly value it. I don't know how to value crypto or a crypto coin or whatever, because it doesn't generate money. However, we can put a valuation on a company like Voyager Digital or Coinbase because it is a stock that is traded through an actual company that makes money. Companies like Coinbase and Voyager Digital do make money because they make money from charging a percentage fee or a fee on the spread when you trade crypto. That is the main way they make their money. So they do make money, so I can do a valuation. So now that that's out of the way, I am, again, not a crypto expert, but I do know how to do a valuation on a company, and Voyager Digital is a fast-growing company that makes money. So I can do at least somewhat of a valuation because there's numbers I can look at. And I personally, the more I look at this company, like the valuation on the company. I did a video before on Voyager Digital, but I just want to go ahead and review some financials here again. So we'll go ahead and look at some stuff on Yahoo Finance. You've currently got a market cap. It may not be fully updated because the stock went down again today. You've got 817 million for your market cap, so below $1 billion now. Forward PE of about 7.82. Price to sales now has fallen well below 2. One of my rules of thumb that I like to use when I'm looking at a company that does not have a positive EPS for an entire year yet, like Voyager Digital, I like to look at the price to sales to even tell me if I should start looking at this company yet. If you have a high growth stock that doesn't make any money yet, or doesn't make a positive EPS, and the price to sales is like 15 or 30 or something ridiculous, I'm not even looking at the company yet. I already know that's too rich for my blood. That's ridiculous. However, when we start to hit 6 or under, I start to at least pay attention and become interested. Now, this may not even be an updated price to sales. It could be even lower, but Yahoo Finance currently says 1.68. So in my opinion, this is one that I'm really paying attention to. And again, that price to sales ratio is calculated by doing the current market cap divided by a trailing 12 months revenue, which in their case is about 415 million. Total cash on hand, 143 million. They even had for both last year and a trailing 12 months a positive free cash flow, but not consistent enough to where we can do a DCF model like we do for stable companies that are, a lot more mature to get a share price. So instead, this is how I would like to calculate a projected share price. Take it as it is because this is sort of a riskier projection versus the classic DCF model I like using. But when you still do not have exactly enough consistency in free cash flow, this is sort of the only other method that you can use, really. You make a projection on earnings per share and a projection on a future PE. You correlate the two and get a projected share price. If anyone's wondering how, analysts calculate a projected share price for, kind of riskier companies that don't have a positive EPS or positive earnings yet, this is how they do it. They make a projected earnings per share by a certain year, a projected PE, and then you just multiply the two. Remember, your PE ratio is just your share price divided by earnings per share. So it stands to reason we can just reverse that and do an EPS times PE ratio to equal the share price. So to do that, I've now pulled up my Charles Schwab account, which is the brokerage I use, and I really like them because they have a lot of good data on here, and basically they have analyst projections. If you go to earnings on their tab and go to estimates, you can see what all the estimations are for the company. And in this case, we've got the EPS estimates. Now, the EPS estimates for 2022, none of them are positive, and no one was expecting them to be positive, and nor was the company even touting that they would have a positive EPS by 2022. However, 2023 is the year we'll be looking at. And I say it's fair that, remember, because it's a sort of riskier company and, high growth, it's not going to be, the estimates aren't going to be as close to each other as a more, mature, stable company. Could it be as high as 61 cents? Sure. Could it be as low as 7 cents? Sure. But their mean or median estimate is 33 cents. So we'll go with the mean or median 33 cents. And then we have to come up with a PE ratio projected by the year 2023. Now, do remember that PE ratio tends to be based on the premium you're putting on the company or the growth that they have. So for example, a very slow growing company would typically be like a car company, like a Toyota or whatever, which is why they have very, very low PE ratios. When people go, oh, it should all be based on PE ratio, wow, I should invest in the auto industry. Well, it's because they're very, very slow growing. That's why their PE ratio is so low. But on the flip side, you have a company like Apple where their PE ratio is always kind of in between 25 to 30. I think it's about 28 right now. And Apple's not exactly super fast growing. In fact, I think in the last 5 years, their revenue growth was under 10%. And in the next 5 years, their revenue growth really is not expected to exceed 10%. But because it's considered a premium company, people put a premium on it for the PE ratio as well. Because no average company with about a 10% or less revenue growth rate would get a PE ratio that high normally. Without going on much further, Voyager Digital has had some triple-digit growth. I'd expect by 2023, you're going to see that it's more in the double-digit growth rate. But you'll probably expect something like 30, 40% revenue growth, something like that, maybe even higher. I think considering all that, a 30 PE ratio by 2023 is very, very reasonable to assume. In fact, I believe putting a 30 PE ratio on such a fast-growing company is us at least being a little conservative, which, if you've seen my videos, you know I like to be conservative in some manner. Now, don't mind me. I'm just going to calculate this quick because I am doing this off the cuff. Okay, someone has messaged me. Leave me alone. We're going to do that again. Let's take a look. 0.33, so 33 cents EPS as a mean estimate for 2023. 0.33 times our projected PE ratio of 30, and you get 9.9, or we'll just call it 10. So by the end of 2023, you can kind of expect an actual projected value for this company based on actual numbers to be about $10. Which, I mean, I know, I get it. That stinks for a lot of people who have been invested since it was like in the 15 to 20s. If you're investing now, that represents a nice little upside as it's now below $5. I made a small investment around the low fives. I'm thinking of adding a little more because the more I look at the company, I like the value proposition. To essentially make a 2x or more by the end of 2023, I think that's really good. Again, it's a risky company. So I'm not making like a huge investment, but I'm willing to put a little more because the more I look at the company, I kind of like what I see. The numbers are the valuation is just starting to look way too cheap by price to sales ratio. And now I can actually, even though I can't do my DCF model, I can now make a projection based on EPS and a projected EPS and a projected PE ratio and get an estimated share price by the end of 2023. It's around $10. And I felt I was being a little conservative too. You never know what could happen with this company. Just want to disclose, I think I was looking at the estimated EPS for this company maybe about a month ago, and it was closer to like 50 cents. The reason it's dropped to 33 cents is because I think the revenue estimates for this Q1 2022 are lower than people thought. But I'm not really surprised by this revenue estimate. And hear me out. In this last kind of quarter, crypto has really not done that well from a trading standpoint. Very low volumes compared to what it's used to doing. So here's kind of my philosophy. If Voyager Digital is able to do a projected 100 to 105 million for the first quarter based on very low trading volumes, I kind of look at that as the bottom line. And that's where they're kind of basing this lower EPS projection from. This now 33 cents is a mean by the year 2023's end. So if the crypto market turns bullish again, which I'm not going to be surprised if it does, you can probably expect much hotter quarters through the year 2022 for Voyager Digital. The way I see it, they've grown enough with the amount of funded accounts they have and the amount of users they have, where they have enough users so that even in a slow quarter, due to a slower trading volume in crypto for that period of time, they're still able to make a revenue of 100 million or more in that quarter. If the crypto market starts to go bullish again and their products that they intend to roll out for 2022 start to make them money too, I think you're going to see even better quarters for them. I'm starting to see it where their bottom line, like the slowest they can possibly do as of now due to all the users they have, and they're still growing. I think the slowest they'll ever do again is 100 million or more. So that's pretty darn good. Now, I know that the stock has been going down, and that's due to two things where it's really been getting hit with a double whammy. One, the crypto market has been slower, and two, the stock market has been slower. So now you have two markets that it's being based on. Remember, it's a riskier stock. The stock market's sort of been going a little bearish, so that's already going to affect those riskier stocks and pretty much almost all stocks and make them go down. But then it gets hit with the double whammy and goes down again due to the fact that the crypto market is going sort of slow as well. So companies like Voyager Digital and Coinbase kind of get hit with this double whammy because, well, they're based on the stock market and the crypto market. So I sort of prepared a list of 5 things that would really turn things around for Voyager Digital where you're going to start to see them fly up again. Because remember, this is a riskier company that sort of is affected by catalyst a lot heavier than a more mature, stable company would be. And they're affected more by tailwinds and headwinds. So the first thing that's going to turn this stock kind of going positive again is if the cease and desist drops or basically doesn't affect them at all. A cease and desist, if anyone isn't entirely sure, doesn't exactly mean anything. It's just anyone I could send a cease and desist. You know, anyone can send a cease and desist. It's a letter sort of like giving a warning like, hey, da 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 da. And, you know, they may try to open a lawsuit or make money off of it somehow. But until we learn more details about what's going on, I mean, to me, the cease and desist, it was a major overreaction in terms of how much they dropped. I guarantee if this cease and desist thing drops and that gets sorted out, the stock is already going to go like above $6 a share again. Even with kind of both stock market and crypto market sort of looking a little bearish right now. Now, obviously, the number two thing that would kind of see the stock going much higher again is both if the stock market starts to do well again, but mainly if the crypto market goes bullish again. You know, it's funny. No, people don't seem to have this understanding, but companies like Voyager Digital and Coinbase make money no matter what. Whether crypto or, crypto coins or whatever are sold, whether they're bought, or whether the crypto market is down and bearish or bullish, they make money no matter what. Coinbase makes their money on unless it's changed, a 5% trading fee. And Voyager Digital makes their money on a spread. So basically, let's say you're selling a coin or whatever for $2.40, they're instead only going to let you sell it for, just example, let's say $2.30. And they take that 10% spread for, allowing you to trade. It's another way to do the fee, essentially. So they make their money off the spread no matter what, whether the market is bearish, bullish, whether you're selling, buying, they're making money off every trade. And that's the main way they make money. They make money in a few different ways, including from people staking, but they don't make that much off of staking. The majority of the money is made off of their trades. Now, people are weird. I don't get it. It's honestly, the crypto market and the stock market are the exact same in this regard. When the markets tend to look bullish, people trade more. I don't get it. If you're looking for opportunity, you should want to buy when the market is bearish, when the market is on dips in red. That's when you make your buys to get a good deal. But for whatever reason, people see red, they stop. People see green, they go. So the market is red and bearish, trading volume slows. Trading volume in the stock market slows. Trading volume in the crypto market slows too. So therefore, in a bearish crypto market, Voyager Digital technically makes less money, which is why the revenue estimate was 100 to 105 million versus what people really wanted it to be higher because of the previous quarter when it was more bullish. They make less money. It's just the way it is. But at least I think we're finding a bottom line for Voyager Digital even in a bearish crypto market. So obviously they'll make more money and things will be more bullish for the stock price and everything and how much money they make too if we're in a bullish market. It's just the way people think. They want to trade more when a stock or crypto is not a good deal. I don't get it, but that's the way it is. It's a mentality thing. Number 3, you want to see them meet or beat that projected EPS. Not only for 2023 for a projected stock price, but just in 2022 as well. You want to see them beating EPS estimates. That'll obviously make it go up as well when they're beating revenue estimates, when they're beating EPS estimates. Okay, number 4, you want to see successful product rollouts. That will definitely turn this stock more bullish as well. The year 2022 is when the CEO, Steve, said that the product rollouts that they planned are going to start happening more. I've seen a lot of people, as I've sort of researched this stock more, because I like to do a lot of research before I make any investment, and I've seen a lot of people negative, angry, or bearish, or just very mad about the stock price going down, saying, oh, I hate Steve because he promised product rollouts and they're not happening. But the more I've looked into it, the CEO claims that these product rollouts did not happen as they wanted to in 2021 because their growth was so much more massive than they thought it would be in the year 2021 that they had to slow down other things to sort of stabilize their user interface and their app and just the entire operation, because it could, and there was proof of this, for Voyager Digital could not handle how many people were signing up and how many people just were on that waiting list. There were so many people that wanted to switch over to this app, and the growth was so huge and so much more than they expected that they really couldn't handle the volume, and they put a lot of resources into just focusing on handling the amount of growth that they received, that it sort of pushed back products, new products and product rollouts that were supposed to happen in 2021. So I did see the CEO claim, now that that has stabilized more, they're going to focus on 2022 as the year where a lot of those product rollouts start to happen. And the one that's happening right now is the debit card rollout. And the way I look at it is, look, I mean, I think it's very smart. This debit card rollout, I don't know how much money it will really make for them in the long run, but Voyager Digital is trying to make their product and service more sticky. Now, my understanding is through this debit card, you'll be able to use USDC to buy, it'll basically USDC will be your currency in the debit card. But remember, USDC is a stable coin that stakes you 9% every year. Annually, but it compounds monthly. So if that's the debit card and that's the currency it's going to be treated as, I mean, I have a regular, debit account through Bank of America where my money just sits there and I buy my, normal everyday things, but it just sits there and doesn't make me any money. As a regular debit card, you don't get anything. It's only if it's in a savings account. So if this works out and I see that it works out, heck, I'll switch to that debit card. Money that's just sitting there doing nothing, waiting for me to spend on my normal everyday things. Because even though I like to invest a lot of my money, I still have to keep a good chunk in my debit card for, normal everyday things and monthly things I buy. But if that's just sitting there waiting to be used and then it stakes at 9% annual, compounding monthly, you can tell that a lot of the products through Voyager Digital, they're doing it. It may not even make them a lot of money, especially staking. I know it doesn't make them a lot of money. I've looked at their 10K. I've looked at the earnings reports that come out. It makes them a little bit of money, but not a lot of money. This is meant to make their business model stickier. It's meant to make it stickier for users so that it's intertwined in their everyday use. So that the more products you roll out and the more successful it is and the stickier you make the business model, you retain more users, you gain more users. And so even though we were talking about before where you may have a slower crypto, quarter where trading volumes for crypto were lower because it was more of a bearish market, your bottom line is going to increase more and more and more because you're getting more users. They're also looking into getting into equity trading, NFTs. They're doing a lot of product rollouts to make their service, their product stickier and stickier to keep more people in. And I don't think I've commented on this in a video, but I haven't done too much with it. I was staking some USDC at one point, the stable coin, but I really like their app. People have had some complaints I've read online, like, the app wasn't working or it slowed down and maybe slow transfers. I had a slow transfer when I first started with the app, but I have noticed The transfers have been a lot quicker. Some of them happened in less than a day. But I will say I've never had a problem with Voyager digital app and how it's functioned. It's never frozen on me. It's never kicked me out. It's never been slow. I really like the user interface. It's very simple yet slick. Anyways, let's move on so that this video is not literally forever. The last thing, number 5, that would, definitely turn this stock bullish, and I think this is the biggest one, obviously, is Nasdaq uplisting. Now, people have been asking for this from what I understand, like a long time, like all the way since last year in 2021, and it was in the talks, but I guess the CEO, Steve, decided to not really go ahead with it or try for it. Now, look, a lot of people are like, oh, he's an idiot. He's ruining the company. He's sabotaging it. But I sort of did some research and looked into it. And I mean, first of all, no CEO tries to sabotage the company. He owns shares in the company. Other executives that are part of the team or on the board own shares of the company. There's no reason he would want the company to fail or the stock to not do well. The stock is not doing well right now, but I mean, it just is what it is, especially with the bearish crypto market that has been going on and with the cease and desist sent to them going on. But I did some research online, and apparently, my understanding is Steve basically, the CEO basically said, we don't want to try for the Nasdaq uplisting right now because things are a little more bearish in both the stock market and the crypto market. He basically said he wants to shoot for a more opportunistic time for the Nasdaq uplisting. When the crypto market's a little more bullish and when the stock market is a little more bullish than it's been. That way, instead of don't get me wrong, if they announce Nasdaq uplisting is in progress and they're shooting for it and it's happening, the stock would go up decently right now, which is really what people want in the short term because they're upset that it's going down. But from what I've read, he's claiming he wants to wait when the markets turn a little more bullish because it's not just going to be a decent little upswing. If you've already got an upswing of things going bullish and then you add Nasdaq uplisting, it'll really shoot up. I mean, I'd have to imagine he doesn't want to do poorly for himself, the board, anyone who owns, including retail, because it's not really in anyone's best interest for him to not do good things or the right thing for the stock, for the company. So those are the 5 things that I think would need to happen or that you want to see happen where the stock starts to sort of go up or turn more bullish again. We'll recap one more time. 1, the cease and desist, basically, there's no actual lawsuit. They're not sued for any money or the case, the cease and desist gets dropped, or if there is a case that ends up being brought up, it's just dropped and nothing happens. 2, you want to see, of course, the stock and crypto markets go up again and turn bullish, because in turn, this stock will do very well again. Now, 3, you, of course, want to meet or definitely beat EPS estimates and, of course, revenue estimates. That is always something that'll do well for a stock when it comes to the earnings report coming out, is you beat estimates. 4, we want to see successful product rollouts for the year 2022, as they claim this is the year that they're really going to be making these rollouts happen. And 5, of course, when the opportunity comes and the CEO, Steve, thinks it's the best time, you want to see a Nasdaq uplisting, because until that point, personally, not a lot of institutions really get interested, or none of the big boys that help move a stock really get all that interested in OTC stock. It needs to be listed on the Nasdaq. It needs to be uplisted. And so, of course, especially at this cheap looking valuation, in my opinion, trying to project EPS and PE ratio into the future to get a projected share price is a riskier way to do it. I feel we did it conservatively and it still came out to about, $10 by the end of 2023 projected. For anyone investing now, that represents a lot of upside and probably gets a lot of people who invested before at least closer to break even. So, I mean, yeah, Nasdaq uplisting will, of course, turn the stock more bullish again. Okay, everyone, that's all I've got for you. Pretty long video, but if you stuck here till the end, thanks for sticking around through the whole video. And my breakdown of this stock, which I personally feel, even though there's been a lot of bearish sentiment and, people are upset, I personally think it looks cheap by the numbers. The valuation is cheap in my opinion. Again, I'm no expert on crypto, but you know what I am pretty good at? Starting to look at numbers. This isn't just some crypto coin or whatever. It's a company I can do a valuation on because it's a, basically like a crypto trading platform, brokerage, whatever you want to call it, that makes money off of people trading on its platform. And, of course, makes money in other ways. I mean, based on the money they make and the current numbers I'm able to look at and doing a valuation, the valuation looks cheap. So let me know down below what you think of Voyager Digital. Are you invested? Are you thinking of investing? What your sentiment is. I know a lot of people are upset or sort of feeling like blah on the stock because it's definitely gone down in the last year. But, I personally think the valuation is starting to become fairly cheap on this stock and on this company. And that's all I've got for you guys. As if it wasn't enough, this video's been forever, but that's all I've got for you guys. And until next time, have a good one.